Okay, so hey guys, welcome back as we analyze NIO stock's current situation. Now, NIO stock has gone down significantly, but then it looks like that won't actually persist for long. NIO stock has been consistently trading below the $25 mark lately. This doesn't mean that the company is doing something wrong, but it's due to the market sentiment that's on the edge for several reasons, such as the Russia Ukraine crisis. So much has been happening lately, and many stocks, including those from the EV industry, have not been spared. So many EV stocks have been affected due to the current market sentiments and will continue to do so in the coming weeks. The short term may be difficult for NIO stock, but in the long term, we believe the stock will be able to recover from the darker days. NIO is down 24% year to date, but so are several EV players in the industry. If the company can navigate the current lows, then we see a major comeback into the industry. In a recent move to strengthen the supply chain and product distribution, NIO announced a strategic collaboration with the Chinese steel producer Bao Steel. The participating companies also seek to boost technological innovation alongside working in sustainable green, zero carbon pathways. Well, we can't entirely dismiss the fact that NIO ended 2021 with 1,400% returns, which was not a small feat. Yes, it's true that NIO joined the EV ship when electric vehicles have become quite popular. But then managing to secure a place in an industry dominated by Tesla is no small feat. The EV industry has massive potential to expand, and the demand for EVs is on the rise globally, which will work in favor of NIO. But despite double-fold revenue growth, 2021 was not a good year from an investor's perspective, as NIO stock price witnessed a fall of approximately 40% over the span of a year. Now, NIO also faced intense competition from the market giant Tesla and the new entrant XPeng, which grew more than 2.5 times in 2021, with its share price rising almost 15%. Both NIO and XPeng reported huge negative margins for the previous year as costs related to R&D and SG&A significantly took a toll on the revenues. Right now, many people are cognizant of the many electric vehicles that have flooded the auto industry, and NIO is not any exception to that. So NIO is planning to enter the mass market with a sub-brand and is developing the model in Hefei in the Anhui province. The new model will be positioned below the current sedan and SUV models, and it targets a production capacity of 60,000 units. Well, just like the other EV companies, NIO is also looking to occupy a significant segment of the EV market. And we all know that it might take quite a while for the company to catch up with Tesla, but that doesn't mean that the company can't expand. Even Tesla started from somewhere before establishing its dominance in the auto industry. Now, NIO had confirmed its plans about entering the mass market back in August of 2021. There's no doubt that the EV market is in a solid growth stage, and NIO will become one of the top players in a decade, and the stock may not be this cheap then. If it enters the mass market, there will be a lot to look forward to, and the revenue numbers could explode. Well, looking back, we see that NIO has reported solid delivery numbers and announced plans to expand in the European markets. Last year, the company made entry into Norway, and over 2022, it plans to penetrate further into the European market, which presents an immense and rapid growth potential if the company could execute its initiatives well. We think that the company will be able to meet the projected revenue numbers when it reports the fourth quarter results later this year. The company ended 2021 with 91,429 deliveries, which was much higher than the previous year, and this number is only going to grow in the years ahead. And NIO's president confirmed that it will start shipping a new 5-passenger SUV called ES7 before the end of the year. It'll be the third new model of 2022, and the car will be revealed in April. The ES7 will be based on the advanced NT 2.0 platform, and its launch will follow the new flagship ET7 sedan and ET5, a smaller sedan. The news has worked as a positive catalyst for NIO stock. As much of the stock is currently on a back foot, we expect it to bounce back when the company launches the new models later this year. NIO will soon be rattling the auto industry with incredible figures that'll boost the stock price. Barclays believes that the rapid adoption of EVs around the world and the booming sales have given a rare opportunity to take a sizable market share of the auto industry and also build a solid position around the world. Jiang Xiao, a Barclays analyst, states that EVs are one of China's top priorities, and the country has a well-thought-out and supportive government policy agenda for the industry. The analyst has an overweight rating for the stock with a price target of $34. All factors considered, it looks like NIO has got some positive ratings among analysts. This could be the bottom for NIO, but there's a long way to go, and investors should not make the mistake of writing it off. NIO stock looks cheap at the current level, and it could rebound soon. Investors should load up on the stock and get ready to rip profits. We might see the stock soar after the company reports the quarterly results and shares further details about the new model. As of now, the company's shares are currently trading undervalued compared to its industry peers. For a company with 110% in revenue growth, it is moderately priced and seems to be a lucrative investment opportunity. In the month of December, most of the electric vehicle companies went through a correction during which the share price of NIO dropped more than 10%. However, the stock seemed to have bottomed out and has been showing signs of reversal lately. Taking these factors into account, despite having some serious risk factors, the company presents a more upside potential for a year-long investment. But we don't expect everything to be perfect for NIO. The company may potentially face a growth slowdown in the existing marketplace. Moreover, investors have also been concerned about the regulatory risks and scrutiny that looms over Chinese technology companies operating and listed in the U.S. The future of NIO very much depends on these crucial factors, and investors should take these into consideration before making an investment in the company. For now, NIO is going to announce its fourth quarter earnings report on March 1st, 2022. Analysts are estimating the results to be on the south side and recommending it as a strong buy. NIO's third quarter revenue and losses both failed to meet the analysts' expectations, and that's because the company had production and supply chain issues in the previous quarter, this being the reason for these downside estimations. And NIO also said the supply chain issues may continue in the upcoming quarter for a while, but the company has sufficient liquidity to support productions and operations. The Wall Street analysts rated NIO as an oversold and undervalued stock. NIO stock price is now 6 times lower than the 2022 forecast. Recently, NIO has reached a 52-week low. The consumer EPS estimate is minus 6 cents, and the revenue estimate is $1.04 billion, which is nearly 30% lower from the last quarter. So the big question is, what does the future NIO portfolio look like? NIO has a solid product line and offers tangible growth strategies. However, NIO shares could continue to come under pressure in 2022, in part due to tougher competition, higher operational costs, and regulatory risks. Given the upcoming tightening moves by the Federal Reserve, investors are also taking money off the table. It's not going to be an easy ride for the EV company, but it definitely will get through the challenges and rise again. What do you think? Remember to share your opinion via the comments section. Don't forget to like, share, and subscribe. Until next time, adios.